done about it, really, because you can't, I mean, you can't get into the leadership of Kremlin to stop them from fomenting war. Done about it. Neither can you, do anything about the reactions to the markets. The money printer in the Feds are printed, I mean, shitload of money. Sorry, pardon my French, for over 2 years now in the name of tackling Corona. So at some point, the chicken has to come to roost, as they say. And that's what's happening. We are feeling the consequences of some actions in the past and some in the present. There is really nothing anyone could have done to change the outcomes. Okay, maybe slightly. If you take the price action of Bitcoin, maybe the cost will have been a bit different if you didn't have all the confluences we had. But as I said last week, we have quite a very large constellation of bad events and bad forecasts that it makes it very difficult for the price to rise, even though there's significantly crazy adoption going on. The price will not reflect that because the economic outlook is very somber. And speaking of the economic outlook, I don't know if you guys are aware, but I think I mentioned it before, that the two countries at war now are one of the biggest producers of grains in the world. And what it means, particularly because Ukraine is number 5, what it means is that we're going to feel significant impact of grain shortages in the months to come, because the supply chains have been disrupted. People can't go to their farms. The ones that own farms, they've been shelled or their mines on it. So things have become very dicey for the economic supply chain of Europe and the rest of the world. And unfortunately for us, I don't know if you remember me saying it as well, Africa also, Africa is a continent of spoiled children right now. Africa also is importing grains when we should be feeding the whole world with grain. So we're adding to the problem because we're importing grain from people like Ukraine and Russia. As a result, we don't have anything. So as I said last week, and I've said it again, if you're in Nigeria, you're better start stacking up real hard. Like every savings you have in fiat, go and buy food and just store at home. And I'm serious. I'm very serious about it, because when the quote unquote global farming starts to hit, it's countries like Nigeria that have stopped producing for a long while that will be hit hardest. And it's evident. The prices of everything is going up because of inflation. That's wave 1. Wave 2 is things are going to become extremely expensive because they're just not there. They're scarce. I mean, we've already seen that example with fuel now. I had someone that just come from Nigeria and was complaining that fuel was, I can't remember how much he called this. It was outrageous, like crazy. But that's just the beginning, because as long as they continue, we're going to feel the effects. And as long as the war continues, all these disruptions stay, what begins to happen is that capital flow begins to move from risk-on asset to risk-off asset. What do I mean? Risk-on assets are considered, riskier, like stocks, like crypto, like equities, some commodities. Risk-off assets are low risk or minimal to no risk assets, meaning assets that are pegged to government securities like bonds, notes, all those government-backed stuff that they pay, maybe 1% or 0.1% or 0.5% per annum. Now, those assets are not risky from a risk point of view. So institutional investors would like to go to those assets in this time when there is global panic. However, well, not only do they have to, as a matter of obligation, because of certain restrictions with money managers and all that, they can't be seen to be playing a risk on assets because the volatility will be too high in this period. So as a result of that, all the funds that are naturally sitting in crypto are finding homes in, in fiat. And as I'll show you later, it's resulted in a in a dollar bull run. That's what I can say. All these factors have resulted in a dollar bull run because the US dollar has just been spiking and growing and growing. And it's expected, one, because anytime there is uncertainty, because the US dollar has been the reserve currency for a long while, everybody wants to just liquidate into dollars. That automatically causes a demand for the dollar, and anything that's traded against the dollar will suffer. So that's one of the reasons why Bitcoin is taking beatings right now. Secondly, as I said, there are too many bad fundamentals. Like the fundamentals have not been good since the beginning of the year, when people are beginning to think about the Fed and what's going to happen when the Fed cuts rates. Are they going to cut by 50 basis points? Are they going to cut by 25 basis points? So all those factors have resulted in dampening the appetite of market makers and investors generally for risk. And as long as there is risk aversion on the streets, it will always reflect in the price. So how should you position as a smart investor? I'm not an investor, a financial advisor, but I can advise you on crypto. So how should you position in this scenario? You should position in this scenario as somebody that is willing to take advantages of the blood on the streets. Like a wealthy man once said, buy when there's blood on the streets, even if the blood is yours. So even if you are bleeding, make sure that you are doing it bleeding, quote and unquote. And the reason for that is, even though it's counterintuitive to take positions when everything seems to be crashing, that is the actual time and the best and one of the rare opportunities to actually get into positions. Because 2 years' time, 3 years' time, we'll look back at this time and we'll say, oh my God, if I just knew then, I would have bought this thing for cents. Now is the time to buy these things for cents. And because many of the listeners on this Crypto Pulse Weekly already have their day job, they're not people who are, 100% crypto and, that's the only source of income they have. My simple advice is, now is the time to take positions, heavy positions. Plan your positions and take your positions accordingly, because you will not have this opportunity for forever. That's just the truth. Bitcoin has literally been dumping since the beginning of the year. That's the word. Literally, it's opened at 46,000 at the beginning of the year, and it's been coming down. It's tried to go up. It's not been able to go up. It's been coming down since then. It doesn't stay that way. Naturally, it doesn't stay that way. Given the fact that we are now barely 2 years to the next halving. If we calculate the length of the depth of the bear market using statistics and data from the previous bear markets, this bear market will end somewhere at the middle of the year, either June or May. If that is truly the case, if the market follows that pattern, and we indeed bottom out in June, what it means is that the cheapest prices are between now and that time. And that's the end, because what it means is the prices start climbing from then on. So it's important to understand. And that's why I've stopped everything. I'm not going through the news yet. I just wanted to talk to make people understand where we are in the market. I talk about it all the time that, we never really got to euphoria. There is no hard and fast rule that says you need to go through all the cycles. The market can decide to jettison a particular phase and jump into the other. We've been pushed into a bear phase, one by smart market makers try to scoop up the market before we go back to a bigger all-time high. Two, by the economic situation. So inflation started kicking in pretty much hard by Q3, Q4, Q4 last year. And since then, the Fed has been talking about, okay, we're going to start tightening, meaning money printer is going to stop. And just the posturing of saying money printer is going to stop has started to rock the market since then. But eventually came out, I said 25 basis points. The market was already down. Now that the market is down, it is down because the week after the next is the next Fed's meeting. Is it the week after the next or next week? One of the two. And they're going to make another rate cuts or rate hike, sorry. That rate hike will probably take us to another 5%, 0.5% increase in Fed rates. By the time that happens, the news has already been sold. So the market will just continue as it was. So the reason we're having this damp and, poor positioning or poor market price in terms of the performance of crypto and even the S&P and many of the stocks is because of pricing that in, because the market is expecting that there's going to be rate hike. When there is rate hike, there is reduction in money supply. What I'm not sure of right now, and I'm tinkering with the possibility that we might actually have in the process of them trying to tweak this rate, we might result in a recession in one of the big economies, given that there's already supply chain problems with scarcity. There have been too many problems that as a result of the backlog from COVID that has not been resolved. So some of those problems are just manifesting themselves now. Those ones have not been resolved, and then you have a war in Europe where everybody is spending money. I don't know if you guys realize that the countries are beginning to spend money out of their defense budgets for Ukraine. They're beginning to ask for supplementary budget. Biden was asking for supplementary budget. Was that yesterday or the day before yesterday? So there is problem. There is problem because what it means is everybody is positioning to go into a long war. If that results in a long war, what then happens is that there will be significant drain on resources. I mean, that's just the truth. Whether it's a proxy war or it's a direct war, but the war is, there are two factions at war. The totalitarian faction and the democratic faction. It's a technical world war in its sense, but it's a proxy world war because everybody's fighting through each other. So Russia is recruiting their friends. Ukraine is calling on NATO and everybody else. And everybody is sleeping in. It's like there are two people fighting in the ring and you are sleeping in instant action steroids and glucose to the people by the ring side for them to high performance patches for them to keep fighting. So that's what's happening. So that economic dynamics is a recipe for disaster because, again, remember where I started from. Global shortages in food will lead to famine. There will be increase in prices, which is already made worse by inflation. All of these things will affect the markets. At the back of this, the Fed is trying to control inflation by hiking the rates. Bringing up the rates means that people may default on their loans. If people start defaulting on their loans, then recession beckons. If recession beckons, Fed will have to open the money printer again. So all this rate hike is a cycle. And that's, if what I'm saying is not clear, what I'm trying to say to you is we're in the face of a cycle, and that cycle is about to turn. So the Fed is going to increase the rates. Money supply is going to drop. People will move from risk on to risk off. So moving from stock and crypto into real estate and bonds. Then there will be recession. Then the government will have to start pumping money again. And then the cycle will go on all over again. So again, how do you position? You position at the bottom and, ride it to the very top. That's so whether you like it or not, we're either at the bottom already or we're close to the bottom. I will show through the technical analysis that I've showed before. We've not really left the range that I've marked for the next 12 months. We've not left that range. In fact, we are close to the bottom of the range more than anything else. So two things or two possibilities. Europe finds an adjustment for or an alternative for Putin's gas, reducing their ability to prosecute the war And then it results in a stalemate in which Russia can't move forward and they can't withdraw, and people are just slinging artillery across the borders to themselves, and then they call for, what do you call it now? What they should have called for in the first place, dialogue, when they've expended all their resources, and then it goes to a stalemate. Unfortunately, the likely outcome of that is Ukraine will lose some of its borders. Most likely, most of those Donbass region will go. Ukraine will become either officially or unofficially a member of NATO, because NATO has been spending money there now. They have to make their money back. I mean, so are the other Western countries. If you've been watching closely, you've been seeing the positioning. People have been going there, UK Prime Minister, UN. So the Western world is taking positions, technically. That's just what's happening. And of course, Finland and these other guys are being threatened by Russia. They are also going to join NATO. So at the end of it all, the world will grind to a halt. Best case scenario. Worst case scenario, Putin gets angry and fires a nuclear weapon. If he fires a nuclear weapon, it will escalate very quickly. And he better be successful if he fires a nuclear weapon, because if he's not successful, then Moscow will be very, very quickly leveled, like very, very quickly leveled. Immediately that rocket leaves Moscow like this, or wherever it is, there will be 20 more pointing in its direction. So that's the worst case scenario. I don't think it will happen. I don't even think that's, given the way they've conducted themselves, I don't think that their militaries are sophisticated as they will have us believe. I think the tactics are a bit dated. So even if they wanted to launch a nuclear warhead, I don't think it would be, I mean, it might be devastating. Of course, if you launch nuclear warhead to a place like London, for instance, probably aiming for Westminster or aiming for the Queen's House in Buckingham Palace. It's just about 10 kilometers from where I am. So really, it's an existential threat. But it will de-escalate very quickly, because the impact of such ammunition is too much. Like it will be, I mean, I don't even think you can try it. And that's why I said it's a very unlikely event, because it's been talking about it, all their nuclear warheads are now under surveillance. So if any one of them goes off, best believe US will be sending like 10 dozens of intercontinental ballistic missiles with nuclear warheads in their direction. And UK too has their submarines. So it will be very, very, I mean, and France has as well. So before they can send a second wave, they will have leveled the biggest cities in Moscow. That's just the truth. They will have leveled them. So if you have fears of nuclear war, just know that that's what will happen. And they don't want to die. They want to spend their money. They just want more money and more clout and more political power. So at the end of it all, their real aim is not to die. They don't want to die for Russia. No, they want to enjoy their money. They want to remain in power. They want to be world powers. That's what they want. And that path really is not going to get them what they want. So even if it happens, and I'm saying, even if it happens, yes, there'll be significant damage to places like UK, France, probably Germany, and US is a bit far off. They probably need to hit the West Coast, because the East Coast is a bit far off. But before those things get there, what I'm saying is the collateral that will be so much that will be the end of the war. It's just, all it needs to happen is just, it needs to happen on one side. It's like two people swinging for themselves in a boxing match, and they both land on their temples, on each other's temples, at the right spots. They'll both get knocked out. That's what I'm saying. So I don't think it's going to happen. I have my reasons. I can't say it openly, but I don't think it's going to happen. But that's the worst case scenario. So put your heart at rest. It's not going to happen. Mostly because I don't think they have as much capacity as they would have. Against that, you also need to think long term. They've probably lost more than 10 to 15% of their total battle force, meaning army, armed forces in this Ukraine conflict right now. You don't grow human beings every day to fight. So it's going to take a number of months at the minimum to recoup that loss and get back to a sizable manpower level from a military standpoint. So if they were going to launch a nuclear warhead, their best bet would have been to launch it at the beginning. The longer this drags on, the less likely it's going to be. So that's the worst and the best case scenario. And I think I just needed to say that, I'll put that out there so that people understand what's really going on. What you need to be worried about this year is food security. So if you live in the UK and you have a garage, you best believe, start buying rice and start buying, if you're close to African markets and you don't mind eating beans, you can start buying beans as well. Because I'm sure that at some point during the course of this year, we are going to have food scarcity. The ways people are queuing for toilet roll and it was toilet roll back in the days of COVID, I think we're going to see those days. And I mean, for very obvious reasons. There is major supply chain disruption. There is major backlog. Another thing that you guys are not factoring in, most of China is on lockdown right now. China is our production hub globally, and China is on lockdown. So, as I said, there are too many constellation of bad fundamentals that it's literally impossible for the market to pick up. And if this had been in 2013 or 2014, when crypto was known by nobody, probably Bitcoin will have gone to $1 or $5 or something. The only reason why the prices are still staying at this price is because institutional adoption is massively going on. Retail accumulation is still going on. And as I said, on-chain activity is still going on as well. So having spent the first 25 minutes trying to allay your fears about the markets, I think we should spend the rest talking about what's happening to the price of Bitcoin and where it's likely to go. So right now, we've had that broken down structure of 48K. This price structure is in play. It might be in play to 35 or 36K. We've not gone to 36 yet. I'm looking out for 36 plus. So sentiment is bearish. Probably bearish till end of next week because of the Fed's meeting. When the Feds come out with their rate hike, the market will continue because by that time it's been priced in. So the market will just continue as normal. In terms of there's this news about Finland donating their, I don't want to use the word stolen, seized crypto. So there have been a number of crypto that have been seized for various activities that are sitting with the government. They're planning to give it to Ukraine as donation towards the war. Again, there is a dynamic that is playing out here that might be an unintended consequence of the war. And that dynamic is the possibility of crypto becoming a reserve currency. And I said crypto because I don't want to say Bitcoin. People have various opinions depending on which side of the aisle you are in the Bitcoin world or in the crypto world. Some people believe Bitcoin should be the reserve currency. Others feel like there can always be an improvement on any technology. And as far as many markets and regulators are concerned, this is another technology. But that's an entire topic of for that totally different discussion in a separate forum. But I think one of the outcomes of this will either be how do I call it now? An attempt to build a consensus CBDC or a use of Bitcoin, because Bitcoin seems the most independent. There might be a tendency to lean towards Bitcoin. So many of the central banks have already trialed out their CBDCs, by the way. I've been talking about this since 2020. So Japan, Bank of England, Bank of Europe, Central Bank of Europe, the Bank of Canada, all these guys have already trialed out. Most of the trials are now completed with their CBDC version. So I won't be surprised if they start talking about introducing CBDCs in 2023, as early as 2023. I won't be surprised at all. But what I'm saying is the current situation in which the East does not trust the West because the West has confiscated Russia's assets because he went to war. There will be gravitation away from storing national assets in dollars. There's also an idea but I'm not going to talk about it today. I'm going to talk about it during the Manchester Crypto Summit on Monday at 12 noon. And that idea is an observation of what's happened usually when there is a shift, a global shift in the paradigm of a particular area. So I'll give a very simple example. It's almost like it results in global turbulence for a number of years. Simple example, the introduction of the technology of the printing press. You can Google it and read about, the printing press technology. When the printing press technology came on board, it had major implications for humanity. One of the implications was that knowledge was no longer in the hands of a few. Knowledge could now be disseminated and democratized. We don't appreciate the impact of that today because, we are going to school, we are reading, we are all learned mostly. There's information available everywhere. And now you have the internet. It scales it to the 10th or the 100th degree. So because we have that knowledge, we're not appreciative of what's happened before. Before now, you could never gain knowledge in any form unless somebody mentored you and gave you the knowledge, or you had access to the books. And the books were usually kept by the people in power because you could only write one book per time. You couldn't multiply your writing or, scale up your writing of books by producing mass prints. So because of that, knowledge was really, really very, very scarce. But immediately that happened, two things happened. The power structures in the world started to change because the people that held power were holding power on the basis of some knowledge boundaries. And as a result, Europe started fighting wars. You can read about the European wars of the Crusades. Most of those crusades were on the back of changing dynamics of knowledge because knowledge was no longer being held by a powerful few. It was being disseminated and democratized. So my thoughts, and I'll expand on that thought on Monday, is that we're going through that same phase now where money is about being democratized. And it's not so apparent because we're writing it. If you were to take a step back, either in future or as somebody looking as an outside observer, it might be very, very, easy to spot that this is what's going on. But I think that's one of the things that's going on. So this is actually way beyond our generation. If the world doesn't end in this generation, then this is a very, very significant step forward in human civilization. But I'm gonna hold that thought because it's a quite divergent thought. I don't want people to start going to bed with all sorts of crazy thoughts tonight. Let's go on with our Bitcoin discussion. Anyway, so as I said, retail accumulation is still going on, but just like I said last week, we have what you call a divergence. A divergence usually means two things are going away from each other. Just like when they taught us, I still remember that thing in maths because geometry was one of the very few things I understood in maths. When a parallel line is no longer parallel, it's either going as a convergence or it's going as a divergence, meaning they are either meeting at some point in the future or they're never going to meet. When you have a situation on the market when you have a divergence, in which case two conditions that are supposed to mirror each other, are supposed to go together, are no longer going together, what it means is that one is going to give. That's exactly what it means. If you have a divergence in any scenario, one is going to give. So right now, we have a divergence in what you call on-exchange balances. On-exchange balance is the amount of Bitcoin available on the exchanges, and then the price. So on-exchange balances have been going down literally for the last 3 years, almost 3 years, consistently. Has been going down, 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 down. At some point, the price will react. At some point, the price will not react. Right now, the price is not reacting because there's a divergence. What it means is that other factors are affecting the price that are not affecting the exchange balances. This is corroborated by what's happening on chain because the blockchain activity is very, very high for Bitcoin. However, the price is not responsive. So what is likely to happen is that the price is going to react to that exchange balance at some point because there will be demand and supply imbalance. So the price will react. And that's why I said there is no better time to get on the market than right now. Another news that I wanted to talk about today, which corroborates the idea of adoption and what is going on, is this news about Goldman Sachs. Goldman Sachs this week issued their first Bitcoin-backed loan product. Of course, it's going to be to their very rich customers and probably targeted at whales living in the United States who know that they can't spend their crypto without the IRS coming after them. So now that they've offered them loan facilities, what this means is that Bitcoin is officially grade 1 collateral, like real estate. I've been saying this since 2020 that Bitcoin is prime real estate in the crypto space. And this is confirming it. But what this allows them to do is that it allows them to custody Bitcoin, which has significant implication. It doesn't look so now, but in the next 5 to 10 years, having Bitcoin on your balance sheets will be like having gold and diamonds on your balance sheets. So I see where this is going, and I think it's a very interesting dynamic. But I will keep my thoughts for the future. But this is a very strong example of what is happening with adoption. In another one, there was a survey by Bitstamp. Bitstamp is one of the earliest Bitcoin exchanges, by the way. And the survey was to have a look at, what are investors planning to do now that the prices has dropped. 70% of investors, both institutional and retail, plan to buy more crypto. So if you're feeling sad about your portfolio position, just know that that is the vibe of the market. People are trying to take more positions. After taking care of what you need to spend and eat for the next few months, I think, honestly, people should take position. It's the best time to. If I had $10 million now, I will be all in crypto. That's just the truth, because there's no better time to buy that now. There will not be a better time, actually, because after the next 3 months, I don't think the price is going to sink beyond what it has already done. And the reason is, again, it's very straightforward. When they hike the interest rate, the economy will react. When the economy will react, once we have one quarter like this of bad GDP, everybody will start shaking and they'll start talking, oh, is a rate hike? We need to do quantitative easing, and then we go back to the money printing. So I think that it's just obvious that what is going on in the foreground is different from what is going on in the background. Yeah, I want to talk about Binance and Kremlin, but I remember that I didn't talk about I missed out a slide on China. The COVID surge in China is causing a lot of problems for China because, for whatever reason, again, the news is not filtering out well. I think they're telling a lie. I think maybe it's another virus entirely that's disturbing them. They've said it's COVID, but that's just what the news said. But people are locked down. Not just locked down. They are caging people's houses, like nailing the doors, literally. I saw the clips. I don't think that's COVID, because COVID should not make, everybody else has COVID. So I don't think it's COVID. I think it's something else that they just lying about it again. And knowing the CCP and what they've done with the bioresearch labs, only God knows what is out there now. I don't think it's COVID. I think it's probably something else that we're yet to find out. But I'll pretend that it's COVID for the interest of everybody's sanity, because if you add another pandemic to what we have now, I don't know what's going to happen. But yeah, I don't want to process it that it's not COVID, but then it's happening in China. Then there was this ETF that was going to come out last week. Was that last week or this week? I think it was this past week, yeah. But that ETF got delayed for whatever reason. I don't know, maybe it's US that spoke to them to not continue, because US has refused to pass the Bitcoin ETF. I talked about the reasons the ETF. You can see some of these videos on our YouTube channel, Crypto Pulse with Dr. Demi, on YouTube, when I talked about the reasons why the US government does not, not US, technically the US government or the Feds do not want to approve a Bitcoin-backed ETF, because it means you have to settle in Bitcoin, and they don't have the liquidity to settle in Bitcoin, so they prefer to settle in cash. So that's why spot ETFs have still not been approved in the United States. But this one's already gone through approval, but they said there was a due diligence that they need to do for one of the downstream providers or something like that. So it got pushed, it got postponed indefinitely. And finally, before we go into the Crypto Vital sites, I've not done this since maybe June, July, August last year, when I talk about the coin of the week, but I thought it's important. I did a deep dive on the CRO ecosystem last weekend, I think, yeah. And at the conclusion of that deep dive, what I said was that if in doubt, just buy CRO. And the reason I said that was, I'm not saying buy CRO so that you can cash out at the end of the year. No. Buy CRO so that in 5 years' time, your CRO of 40 cents could be like $40. That is 100x. I mean, I think that's 100x in 5 years is actually pretty decent. And the reason I say buy CRO now is because I'm beginning to see things that are happening under the bonnet in the CRO DeFi ecosystem. And even me, I'm not able to keep up. Somebody sent me something, I think, was this morning. Someone sent me something this morning, and I was just like, okay, I'm going to check it. Then after lunch, I said, let me just take a small nap on my chair. By the time I woke up and said, let me check, that stuff was closed. It was like an IT or some sort. And, there are a lot of activities going on with CRO. They've done of course, the mainnet went live last February. Now they've migrated to the Chronos beta blockchain. And tons and tons of DeFi applications are springing up every single week. So what I think is happening is CRO is trying to follow the path of Ethereum plus Binance, and also provide cheap DeFi transactions that would compete with Binance and Ethereum. Why do I think it's significant? I think it's significant because CRO already has a unique spread. Let me use that word. They've managed to penetrate the US without incurring so many regulational or regulatory hurdles, and people already know them. So the next time people start having, the next time the taxi driver start talking about Bitcoin, when, at the peak of another phase of the markets, know that the prices are going to be crazy, because these guys are building now and they're stacking up now. And because many of these things, like I said, they're tied to the price of Bitcoin. And once the market has released the price of Bitcoin, the price of Bitcoin is able to move, it's a matter of time before you see this ecosystem coins really, really move. I'm going to talk about ecosystem coins on Monday as significant play in the next 3 years. A simple case study is Binance. When Binance came out in 2018, they were giving people for free as airdrop. And you could get it for as cheap as $1. Actually, you get as cheap as $1 on the exchange back in the days. In 2019, 2020, early 2020, Binance was selling at $11, so thereabouts. It was selling at $11 up until March, April 2020. That was when the price climbed, like joke, like little, like joke, and Before you know it, it went to as high as 600 last year. It's currently back at 400 or thereabouts now, 380. But what I'm saying is, these are not, they're not high risk. They're not high risk tokens. And, if you have the patience, you will actually gain value from this, significant value. And like I tell people that, yeah, crypto is not really, truly, it's not a get rich scheme. It's not a get rich scheme avenue. It's a get rich slowly, but surely avenue, very surely, because we're still early. We might not, we might not be very early, but we're still early in the adoption cycle for crypto generally. So I think by the time many of these things come to mainstream, yeah, many of the things we are seeing today for cheap, they will be 100x's and 1000x's plus, because the adoption will be much more than what it is now. So I'm going to move on to analyze the charts, because I've spent a lot of time talking today, which is quite unusual. Before that, yeah, extreme fair. We're back to extreme fair. I think we were 22 weeks before the last. Now we're back to extreme fair again. I think we'll sit here for a few more days before we're going back up. In terms of where we are, yeah, I think we're in capitulation, or we're close to capitulation actually, because people are still holding out. Funny enough, for 70% of the investors to say they still want to buy, people are still holding up. And like I said, there is no hard and fast rule about the market needing to go through all this cycle in the psychology of the market. No, sometimes you can jump. So, like we were here, we never really touched trio. We just came to complacency and got all the way down. I think we're here now. We're going to get out of this zone in the next 3 to 4 months max. It might look like, the market is not doing anything now, but once all those things I've mentioned in the first 25 minutes of this call, once everything has played out, then everybody's head will settle down, and we'll get some sort of stability. In terms of the price action, where is my trading view? Interesting. Can't find my trading view, okay. This is strange. In case you're wondering what's happening, I have 3 screens before me, so I usually have my trading view on a dedicated screen. Yeah, apparently it's overlapping with this one. So what's happening here? This is the price of Bitcoin. Let me go back to daily. That's a lot more reliable. What I was saying at the beginning of the year was that we seem to be bottoming out based on the idea that this trend line and this trend line have joined together, and we're having a relatively higher high. Back then, I was expecting that the price was going to break up, because it seemed to be forming a market pattern called ascending triangle around this place. And it did break that way, because what happened then, just to reiterate that position, what happened then was it went 1, 2, 3, 4, 5. So I was expecting that this down leg actually was going to stop here, then shoot up. But what has happened is it's now broken down. I think it's coming close to retest this trend line before any attempt forward. Now, I don't know how far this attempt forward will go, because it needs to get here for it to make any sense of recovery. Otherwise, it's just going to get rich. So right now, we've not touched back on the trend line, which is currently at 36. That was why I said I had 36K plus on my mind, because looking at the structure seems lined up to want to attempt to touch 36. If it does touch 36, it will have confirmed, or how do I put it now? Yeah, it will have confirmed this trend line as support. If it touch 36 and bounce, which is very likely, because we're already on the edge of the Bollinger Band as well, it will touch 36 and bounce and form a pattern like this upward for the next days or weeks. Whether it's going to break upward higher than, of course, if it breaks upward, it needs to go higher than 48K for it to make any sense at all from a market structure point of view. So that's that on the on the higher time. Let me go for weekly just to demonstrate. Yeah, so this was what I said at the beginning of the year for weekly, that we broke out of the Bollinger Band on weekly. And anytime it breaks out of Bollinger Band on weekly, you can expect that the market's going to make a U-turn of some point. And that's exactly what happened. The market made a U-turn and went back to 45K. Then it came back again and came to 34. Now 34 to 32 was a higher high. And what I'm saying here is we have another higher high waiting here. So it needs to break 36, or it needs to touch 36 for this breakdown to make sense. However, if we come down here again, to 33, I think there's a very high chance that the market will attempt to break down further, because what it then means, honestly, what it then means is that, wow, that's sinister. It means that there is a nuclear war. If that happens, it means there is nuclear war that's happened. Yeah, that's what it means. If well, maybe not nuclear war anyway, but yeah, that would be a very bearish signal, because it means that it's likely going to come around here, which is 23K. And then it means we have to consider this structure, this big structure, as a double top. And if you're considering that it's a double top, then the bottom is 13K. So technically speaking, yes, it looks like it's a possibility, but I don't think so. To be honest, I don't think so. The fundamentals and the on-chain analysis don't line up with this technical. And usually in technical analysis, you need confluences to justify your assessments. Just like in medical sciences or in medicine, you need a lot of context apart from what you are seeing in your test results. So if you look at somebody's chest X-ray and it looks like something, you need some other corroborative data to make an assessment that, okay, this is actually what is happening. So right now, the picture really looks bad, technically speaking, but we've seen that a number of times. So when Bitcoin was here in 2021, it really looked bad, because what it meant was that the market had gone up and everybody was like, we are coming back. That especially after here, actually, I remember, especially after 42K, then when we topped 42K and started coming back, there was this noise in the streets that we've made a double top, or sorry, a head and shoulder. And that based on this head and shoulder, the bottom of the structure was 11K. Very, very rampant analysis back in the days. But what then happened? We literally just pumped back up and went all the way to make new all-time high. So I think we might find ourselves at some point in that kind of scenario. But right now, this downtrend, so we've been in a weekly downtrend now for the last 1, 2, 3, 4, 5 weeks. I don't think it's going to go beyond next week, frankly speaking. I don't think so. But we'll see how it goes. Same thing with the price of Ethereum. The price of Ethereum is really just dancing around what the price of Bitcoin is doing. And because there's this news about Ethereum merge, I don't know if you guys have heard about it. So there's some significant changes to the protocol that are supposed to come on board. The news out there within the development cycle is that change is not going to come. And because that change is not going to come, the price of Ethereum is going to dump. If the price of Ethereum jump, it's a good opportunity, because Ethereum is more institutional grade in a way than Bitcoin right now, because many people think Ethereum is a technological platform and as a result can be leveraged for so many things. So there's a lot of institutional money going into Ethereum. So very good buying zone for Ethereum. But I think Ethereum is looking like 2.5 to me, based on what this is the daily, right? So let me see what the weekly looks like. But it's looking like 2.5 is a sensible bottom for Ethereum. So this is the same trend line like the one for Bitcoin. So bottom here will be 2.7. Okay. Yeah, maybe 2.7. 2.5 bounces up back to 2.7, because even then we have a fib line. Yeah, we have a fib line at 2,696. Yeah. So it might be 2.7 that the market takes a stop. But I'm very cautious to call it yet, because I need to see the next week. Especially because it looks this way. when the market looks this way, there's from my experience, there's almost an inevitability of a downward pressure. But again, this guy is there. This trend line is there. And of course, if we break this trend line, then 34K is the next support. If we break 34K, then the prices will go lower. But bearing in mind that 34K, I needed to go back to the price of Bitcoin because Bitcoin is the master and Ethereum is the slave. So whatever the price of Bitcoin is doing, you need the Bitcoin price to interpret the technicals. That's why I had to flip back to the Bitcoin price to check the technicals again, just to take a look at it. So what I was saying was, even though 34K seems like a reality based on the dips that we had back in February and January, 34K is also the price of what's it called? It's also the, what do you call this thing? Bitcoin production price. That was what I was, yeah. So 34K is also the Bitcoin production cost. So it's a bit difficult to see the price dropping below that. Let me close this RSI just for a bit. I don't know why the shadow is not showing. Usually you see the shadows show. Let me change. Oh, okay. I know why the shadow is not showing. Let me change to the daily. Yeah, to explain what I'm saying. So yeah, this is production cost in the red dash. It's dropped now because the price has been low for a while. So it's affecting the hash rates. So this is 33,846. We've touched that, we've touched the fringe of the production cost twice. So even if this drop was going on, the worst case scenario, the expected worst case scenario is that it will bounce around 33 and 34. But even that is still bad because it means that the price is sustaining. Yeah, that the price is sustaining. The 334 is around here. Yeah. It's sustaining a downward momentum. One, but it's not likely to break down because a lot of, I've explained, I think I've explained this in January or February, that a lot of big miners are buying up the Bitcoin of small miners. So small miners will not want to sell their Bitcoin at a loss. So anytime the price shoots up, like what we had here, it will be the small miners selling quickly so that they won't have to sell when the price comes back here. So anytime the price comes back here, the big miners' monies are sitting around this region because this is around the region where the Bitcoin production cost sits. So essentially, what it does for the big miners, because the big miners, as I've explained in time past, they borrowed money already. They have a very long cash flow runway. They can afford to just borrow money right now. So they will buy at production cost if it comes to production cost. And that's why the price keeps jumping off anytime it hits production cost. If I take you back to the daily, you see what I'm saying? So even though it looks like it might want to drop to those levels, this is where production cost is. Anytime price touches production cost, you see a very strong reaction. You can see this. Let me increase the magnification. You can see this wick, this candle wick. It shows that the price got sharply rejected. And from there, it sends it up again to the end of the band. Again, that's exactly what happened. It sends it up again to the end of the band. So even if next week is completely bearish, it means that we have a good chance of touching production cost, which sends it up again to the top of the band. And I mean, you can see historically very few times as the price, especially since the bull run, as the price successfully sat inside the production cost of Bitcoin. The only times was in 2020 when there was COVID and there was a lot of mess. That was the only time when the price was really sitting inside the production cost. But since that time, you can see that it's been out of it and it's not been sitting any close to it. So that's I've spent too much time actually analyzing today. So that's that in terms of market analysis. On Monday, we're going to Manchester. We're having a crypto summit in Manchester. If you're in Manchester or you live around Manchester, you can join us. It's free. You can join us online as well. The tickets is on the link in my Yeah, so the ticket is on the link in my what's it called? Instagram bio. And I've also on Instagram, I think tickets on my bio. I've also sent the link on Zoom for those guys on Zoom. It's you can also get it on Eventbrite. Just look for Crypto Pulse or Manchester Crypto Summit. It promises to be a very enlightening time because there are some things, there's some new information that are coming up that I mean I didn't know 2 years ago, but I think we're in exciting times, and I think we're going to have a lovely time in Manchester on Monday. So that's all out of me today. If you do have your question on Zoom, you can unmute your mic and just ask your question. If you have a question on Instagram, you can just type in your question and I'll take your question and answer them. I think we've been able to stick with the 1 hour time frame, so it's a good thing. So in the absence of no question, okay, somebody says, will there be a Zoom link to show the live stream on Monday? Yes, you need to register on the Eventbrite link that I just sent on the charts. When you register on the Eventbrite link, you get the Zoom link.
Okay, good evening, Dr. Demi.
Yeah.
Yeah, this is Rotimi.
Good evening.
Good evening. Okay, I thank you for the time. It's been a long time I connected to this. Thank you for the analysis and the information. I just want to know, sorry, a lot of things you've spoken about, great stuff, promising. I have a question, please. Are you still, as a lead in this space, are you actively trading as well?
No, I stopped trading in March, and the reason I stopped trading is because the market dynamics seems to have invalidated all my trading metrics. So it looks like I was literally losing money. That's just the truth. I've been losing money trading, so I had to stop. And what I found out was because the market volume is not like what it used to look like. Market makers are able to manipulate the price, so the technicals are not adding up. So if you get on the chart on the lower time frame, where usually I would trade, if you look at the analysis, it doesn't add up at all. So I just decided that, you know what, there's no point losing more money. Try to swim your way out with trading. So I've stopped trading, and I'll probably not start again until at least June or July, when I think there will be a lot of stability in terms of, the fundamentals. But the fundamentals have not been favorable, so I think it's really messing up the technicals.
Okay, so I could see that you were giving some indications or hints as to what to buy, CRO, this, and what the performances probably will look like in coming weeks. Like you know me well. What's the fate of those who now entrusted a lot in your care?
Yeah, well, it's just a waiting game. It's just to wait for the market to recover, and everything will be back to normal. As I said, the fundamentals have not been good, and if you joined at the beginning,
No, I actually didn't join at the beginning.
Oh, okay.
I probably joined some 10-15 minutes into the session.
Oh, okay. I think it would be good for you to listen to the first 25 to 35 minutes, because I really spent a lot of time explaining why the market is in the current state. And in fact, somebody sent me a message from Canada just before the meeting started saying, there seems to be blood on the street, what's going on? And I said, okay, I think it's important to explain what is happening. We have too much bad fundamentals, basically speaking. Too many bad fundamentals aggregating together. So it's not only affecting It's not only affecting the price of crypto, it's taking its
Yeah.
toll on the whole markets.
Okay, maybe I'll suggest we take this offline. I just have to pop in to hear you out one more time, and please let's discuss this offline, maybe after this session,
Sure.
so that we could talk about the way forward. I'm
Sure.
sure you have full understanding of what I'm trying to talk about.
Yeah. Mayo, please, can you unmute your mic?
All right, thank you.
Yeah.
Hello, Dr.
Hi,
J.
Mayo.
Hi,
Have you registered on the events link stuff and you didn't get the?
yes, I have. Yes, I have.
Okay. I will look at the details of the tickets, because usually the tickets, the information has the link. But I'll look at it. If it
Okay.
doesn't have it, I will update it tonight.
Okay, thanks.
Yeah. Which of the tickets did you pick?
Well, I had planned to attend, but I'm not feeling too good to attend this time.
Oh, okay. Okay. Okay.
Yeah.
Are you on the WhatsApp group?
Yes, I am.
Okay, please send me WhatsApp message after this call so that I know it's you.
Okay, will do.
Yeah.
Thanks.
All right. All right, everyone. Do have a lovely weekend, and catch up with you on Monday. And for those who are not able to attend, probably you see you again next week. Thank you and God bless. Bye.
Bye. Bye.